All right, so listen, this is the euro dollar. Let me just put the daily candle, yeah. Every time before I start, I look at the euro dollar, yeah. This is the daily euro dollar. Usually when things are good, people are selling dollars, yeah. When there is panic, they are buying dollars. Now, I'm just talking today about the euro dollar because we're approaching these lows, yeah. If everything is good, then why they are buying dollars? It's the first question. Second question is, why hasn't, wait, let me just show you. This is the daily chart, yeah? So it has been unable, the euro dollar, to close above this very significant monthly high. This is a monthly high. If I show you the euro dollar in, let me just show you the, because I don't have continuous euro dollar. So you remember this level, yeah? 111. Let's go to the monthly. As you can see, it's here, yeah? It's here, this level. It has been unable to close above this level for how long? So let's go back to the daily. If it starts breaking this level, 109.47, we're going to start having problems. Now, this is the first thing I look at, yeah? So euro dollar is ticking down on a daily basis. Usually when we want to have updates in the S&P, it's the reverse pattern. Yeah? So let's, okay, hourly, I want it. Again, so first I look at the euro dollar. Then what do? I look at the bonds. Then I bring the bonds. This is the US 10-year, yeah? Have the bonds broken the range? What are they doing? No, they are inside the range, but there is again failure from this level. Yeah, it has been unable, the 10-year not to close above this level. You have been going down. Now, when the bonds are going down, the yields are going up, and it's very negative for Nasdaq. And if it's very negative for Nasdaq, it's very negative for S&P. Let's say this way: euro up against the dollar. There's a high probability we're going to have an up day. Euro down against the dollar, so the dollar is bidding. The fear factor is up, so we have a higher chance of going down. Again, these are all probabilities. Yeah, it doesn't mean I'm not going to go long or short. Yeah. Then I take the daily. What has the daily done? The only thing I've seen in the daily, I've said in the previous webinars, it has double tested the first fib of this move and has been going up. Usually when it tests the first Fibo, it goes back to the high, which it did on this occasion. It went to the first Fibo, and textbook version, it broke out the high and failed. Now, it went back to the first Fibo, and the market is just telling you we're not ready to go down again. So we are hovering inside the no man's land between here and here. Unfortunately, it's the whole April and even more. As long as we are here and here, do not expect volume, do not expect anything. Nothing is going on. We are trading, as we traders call it, in no man's land. This is no man's land. Nobody cares what's happening within this range. Now, things are interesting below here, and obviously, I would say not even above here, above here. Can it go and close above here on a closing basis? That's the interesting part. That's the daily. After I see the daily, I go to the hourly chart. What has the hourly chart gone? Yesterday, there was only actually a not trade day. I call them NTDs. Not trading. It's a strategy. Why do you, when you have those days, why do you want to come in on a Monday with a VIX at 19, so volatility is very low, and trade this day? Basically, Mondays in general, be very careful in trading on Mondays. They're very tricky and usually very low, or even not much is happening. Usually, it's range trading on a Monday. Usually, yeah, statistically. So I'm watching the hourly. Where has the hourly closed? Has it closed above here? Yeah, not really. So it hasn't really closed below yesterday's low. Yeah, that's the only thing I'm seeing, nothing else in terms of technicals. And has it reached the first Fibo? No, it didn't. It hasn't reached the first Fibo. Now, in terms of fundamental, in terms of announcements, it's the 9th of the month. What do we have every 7th to 9th of the month? CPI. So nobody, gentlemen and ladies, is going to come in and trade prior to the biggest figure of the month, which is CPI right now. So taking all this into account, well, I have decided, but I'm going to tell you, I'm probably not going to trade, or I'm going to do one trade maximum, because I know tomorrow is going to be a lot more volatile than today. So it's going to give me a lot more opportunities. So why should I go and bet on a day where I kind of speculated there's not going to be too much traffic? Yeah. Now, also, what other things I look? I look all the other markets. I look obviously at Nasdaq, and the daily and the hourly. I look at the S&P. All markets are correlating. All markets are kind of correlated. Has it breached any significant levels? No. Are they all trading within no man's land? Yes. Okay. I say to myself, okay. We're inside no man's land. Now, what has the Eurex done? Let's bring the DAX, which I don't really care too much about the DAX because it's a monkey contract. I always bring out the Eurostox. What has the Eurostox done? Okay, that's quite a move for say today in the Eurostox. What's the volume? Also the volume. The volume. What's the volume pre-market? Oh man, that's not pre-market, but I'm watching the S&P. Usually a good volume. This is the volume that has traded today, 132,790. When this figure is above, let's say 300 to 400, it means many people have traded and many people are trapped into positions, which means translations means we're going to have much traffic, because these people have to stop. The one who is wrong, maybe both are going to get stopped. So the more volume that has traded pre-market, the more volume will prevail usually after the cash open. Yeah. So when I'm watching so the average before we start, it's around 270,000. The average of the pre-market volume, the average. Yeah. Today we have 133,000. That's another indicator telling me today is going to be bullshit. No one is trading. People, you have to understand, you are not competing against people that are in the same league with you. You are trading against algorithms, first of all, that have sophisticated models. Yeah. So you cannot have the same strategy any given day. So today, 133, everything is quiet. You have a relaxed tone in your voice and in your trading, a relaxed tone. We'll see what happens. If there is an opportunity, we trade. And that's the correct thing to do. That's what the volume is telling you. We are not trading. Are you going to trade? Yeah. Did I start too early? Well, that being said, I pretty much covered everything for today. 4 minutes. For example, yesterday, yeah, what is the hourly? Yesterday, in my experience, on a Monday, on those volumes, yeah, on a Monday on those volumes, it doesn't even reach into significant levels. It just ranges on the pre-market lows and the pre-market highs, which is exactly what it did yesterday. The only level that I saw, but I didn't trade because I left, was okay. I said to myself, I'm gonna go in and buy. Since we closed above this hourly high, you see those two candles, we closed above. So the first support was here, 141.75. Where did the market eventually go? 141.75, 141.50. Perfect entry. 10 points. I think it was 10 quick points. Let's go yesterday when it reached the.
So much, we're about 3 minutes away now to the bottom of the hours with the US cash equity open.
here. 4:35. Usually I'm here within those hours, but yesterday I left. I didn't even trade. I decided not to trade. So there was only one opportunity, one technical opportunity. Here, boom, 10 points. Then in the evening, something happened. I don't know what was this news, but that was the only technical trade. So only one trade yesterday we have given you. Now, my problem on very quiet days is the following, yeah? What if I'm wrong, I'm saying to myself? What if I'm wrong and I only do one trade? And I'm saying to myself, does it worth it if we're going to do only one trade? And I go to the gym. I say, what if I lose? I mean, what if it doesn't work out? And it's only one trade. It's like a risk reward kind of thing, yeah? I'm saying to myself, it just ain't worth the risk. Yeah. I 1 minute for the, no, actually we're about to open. If you want to ask me something, either type or switch on your microphone and ask me verbally. All right, this is the 60-minute chart. The first fibber is 24.75. Let's see if it has the power to go down there. Now, everybody has been talking about this debt ceiling drama, yeah? Now, in my trading career, I have encountered this many times, this, last minute deal before the debt ceiling, or I think even once in 2011 or 2013, they didn't go into they didn't have a deal, and the US started, it stopped paying its workers, its government workers. Okay, the bottom line is just don't read any of this bullshit. They always find a deal. I mean, they are not stupid to bankrupt the country, yeah. So it's not even up for discussion. So don't read anything about the. It's just politics, nothing else. Politics. It's in no one's interest to bankrupt the country, yeah. Now, is it the correct thing to increase the debt ceiling? Obviously not. It just prolongs the problem, yeah. But again, politics, it's not the problem. They're going to blame someone else. Now, the Republicans, they might try and block it. They might they might stop paying for like 1 month maximum. Everyone's going to be talking about US default, and then they're going to find a deal, and everything will be fine. So the way I'm always watching things, yeah, I'm saying, okay, have we closed below here? Yeah, but not really. We need a firm close. So what has this candle? What's the high of this candle? You see, it's exactly 38. What's here? The low, 37.50. Okay, so it has retraced to here. But the thing is, none of this candle has a very firm close, so well below this level. So if I draw a line here, yeah, at 37.50, none of these candles, and this hour hasn't closed, it has closed below this candle. So it's different for me. It could go up, could go down. I'm just going to wait for a firm closing. Those were previous levels. Also, which I'm going to do a webinar about it. I talk with Alexandros, your host. Now, 90% of my strategies depend on the closing, 90%, because it gives you a lot more opportunities than any other strategy, yeah. So, for example, what do I mean by closing? I will never go short this market if this candle hasn't closed below. So where did this candle close? Boop, close, not where it went, where did it close? Because buyers and sellers are fighting, yeah. So if it went down here and it went to close above here or at this level, indifferent. It could do the same thing another 4 times. You need a firm close. So let's say the red body has to close down here, not up here. Up here it's indifferent. It closed exactly or even higher. So the low is 34 and the close 34, exactly 34. So back in the day when I was trading bonds, I've learned this lesson. In quiet days, prices are subject to manipulation. Manipulation, what do I mean by manipulation? Do you think that market makers do not have the power to manipulate the market to 5-10 points? Of course they do. So in quiet days, market makers, they're just, trying to fool the noobs or the people that decide to trade. It is not random that on quiet days, big players stay out of the market. They know that the market makers can destroy them. Yeah, big boys come in when money is being bet. If there is no money being bet, so if there is no volume, they do not come in the market. They come in to make money. And I'm talking about big boys, yeah? People that trade 1-2 million per day. And then maybe more. To understand the sayings of some big traders, some huge traders I'm talking about, yeah? Back in the day, between, let's say, I would say until 2010, I don't know what happened to them after 2010, when you talked about 1 million, they would say, yeah, it's peanuts. 1 million a day. I'm talking about huge traders. So $1 million a day, yeah, not bad. And they said it was peanuts. Again, where does this candle close? Where does this candle close? Count the seconds. 30 seconds. Is it closing above or below 34? If it closes below, that's why I'm counting the seconds. You cannot see the seconds, but does it close to 34? Then it's bullshit. Does it close way below 34? I'm going to look what happens at 34s, yeah. So this closes, I would say, okay, that's below 34. Now, what's the 34s? Stuff like this. I'm not going to trade with this volume, obviously. But let's say it was a live day. So what does the market tell you? Okay, we close below 34. So we close below the range. Obviously, the first resistance would be 34. Also, I never trade. Obviously, I do trade. I just sometimes I pretend to be super successful. The wise thing or the correct thing to do is not to trade with these volumes. Volumes define anything. Low volumes, again, I told you, is subject to market manipulation. They are going to stop you out. They don't care about, when there is no volume, they don't care about technicals, they don't care about anything. Still, volume or not, the S&P always, I would say 90% of the times, they give you the entry. So we should go back to 34. Let's see what happens at 34. You know, stuff like this, yeah. Simple stuff. You don't need to use anything else for S&P. So we're getting to 34. Let's see if it's going to hold. Here we are. Does that make sense what I'm saying? I mean, I watch the technicals, but I prefer not to trade on very, very low volumes, and especially on a day, the previous day of the CPI. What's the risk reward there? There is no risk reward in that. There's no reward, let's say, not risk. There's a lot more risk than reward. high. Also, if you ever, by the way, that would have been stopped at 38. Yeah. If you ever put a position or decide to put a position, yeah, always have a fixed strategy about it. Yeah. If you start thinking like, yeah, I don't think it's a good trade, or I don't think the 34 is gonna work out, just get stopped. Don't get out beforehand, because it's a bad habit. When people start getting out, or they don't follow the strategy, they will never follow the strategy. Yeah. So that would have been stopped. So that was all these people that went short, they got stopped out. You see what I mean? In a normal market, they would have fought the 34s. Here, they didn't even fight it. Market makers just pushed, they stopped everyone out. They know that everybody has a maximum 4 to 5 point stop, like I do. Stopped. About 34. Nothing for us here. Also, when there is a technical level, yeah, and it goes to the technical level immediately, then usually in the rest of the day they're going to disregard technical levels. They're not going to hold probably any technical level. So that's another indication telling me not to trade. If you cannot trade technically, how are you going to trade? You need volume to trade technically, yeah.
Welcome to the UK, an update from the Financial Services Minister, noting that the government will not be changing the Bank of England's inflation targets.
Just watching PacWest what it's doing, yeah. Doesn't look good. Look, during the pandemic, I mean, if you put everything into context, yeah. Look how much money were printed during the pandemic, yeah, and all this money bloop. QE has been the biggest scam of capitalism, and this is probably what's going to destroy capitalism. The quantitative easing that they did, yeah, it was the cherry on top. The worst form of capitalism. Everything was going up. The banks were not lending for 7 to 8 years. I would say 10 years since from 2009. I would say the credit started being more relaxed with banks lending around 2019, and for 10 years, equities have been going up. Yeah. So the REITs have been profiting, and and when the main street eventually made some money, or was able to take some loan or open a new business around 2018, 19, yeah, then COVID came. Then they printed so much money, they continued lending the banks, and then you have inflation. So Main Street always gets screwed, yeah. And now they have to do quantitative tapering. And those people that took loans with very low yields, at some point they're gonna be forced to pay a very high yield, so a higher mortgage, let's say. And all this thing with debtocracy that the US has initiated will probably cease to exist at some point. It can't be that you always have to amass debt in order to succeed. Yeah, it's just it's not normal. Yeah. So how was the economy was growing before when the interest rates were 7 and 8%? Yeah, I was here when Janet Yellen in 2013, when she saw that quantitative easing was so successful and they would just print money because the dollar is the world's reserve currency and they can do whatever they want. She came out and said, we're not going to see again a crisis in our lifetimes. That woman was the president of the Fed at that point. Yeah, and she came out and said something like this. Okay. And now she's saying you have to increase the debt ceiling, otherwise the consequences are going to be catastrophic, and there is so much debt. Yeah, there's so much debt. She's head of treasury now, Janet Yellen. Yeah, there is so much debt. Yeah, okay, which she was responsible as well for increasing the debt of the US. She was part of the problem. Now the debt is the problem. Okay, everything is politics. And Jerome Powell, I was here when he was just a member of the FOMC, and he was the biggest hawk. I mean, when everybody was talking about quantitative easing back in 2009, 2010, he was going against it all the way. Yeah? And no, and we should hike rates, and this is not the solution, and blah blah blah. 10 years later, he's Fed's president. The debt and QE has gone, I don't know, 9 trillion. He prints another 4 trillion. Where was the guy that was saying that he was against QE and against printing money? And then finally you have inflation. But in this life, nothing is for free. Nothing is for free. Love is, but people focus on money more than love. Money maker. When they tell me this is not a Goldilocks, Goldilocks means we are stuck. Oh man. This gentleman is called Goldilocks. We call it. We're stuck. We cannot go down, we cannot go up. And doing nothing is costly, yeah? Because for you doing nothing, that you are in a challenge and you're trying to pass, you have to do something.
Speaking at Bloomberg's Future of Finance conference, no indication of FA text to be released.
Goldilocks compares those days, or even those days, with those days. You don't need to be a 30 years trader to understand that when you should trade and when should not. I mean, 2023 started off like kind of okay. You picked up in March, where you thought like, okay, things are going to start moving, and then boop, they printed more money, they saved the banks. Goldilocks. Everything is about if inflation is gonna go higher or not. Which, if you put a gun on my head, I would say will go higher. People are just used on easy money by now, and technology has improved. And just depends if you have read history and depending on your age. So if you're old enough and you have relived the inflation of 70s, or if you read history, you're going to realize that inflation doesn't really go down very easy. It just takes a lot of time. And everybody knows this. That's why the Fed is saying higher for longer, yeah? Higher for longer. Look at 4150. Was this, what is it? Here, 4150. It went 41. It's this hourly low yesterday, yeah? And it's this high here, yeah? Doing nothing is not costly, saves you a loss. Yes, I really like your spirit, Nadine. But I mean, you're binded by time. Binded it means like you have to perform within 1 month. Otherwise, you pay again. No, I'm with you. I'm with you. Me that I trade. I mean, I don't do the challenge. Yeah. Nothing is pushing me not to trade. I know it's the correct thing to do to save money. But you, by the end of May, you have to extend the program, and I do not. So you have to pay more, and people are just saying, fuck it, yeah, it's just, I mean, I can reset my account and all this kind of stuff, which I'm not going to go into detail, but you should, if you can do it, and Nadine, it's the correct thing to do. I mean, personally, if I did these challenges, which I'm not going to be, I'm going to be honest, I did Top Step and I did Apex as well, just to test it because I was going to get into this business. What was I going to say? They're pretty good for someone to create a strategy. They're just imagine someone like me that I put money down. I put 10,000 when I started. I just had to succeed. Yeah, I mean, I had, and not only I put 10,000. Listen to this. When I first started, so I was applying in the UK, and I got 2 job offers after 1 year. One was I remember, I think I did around 60 interviews. That was very painful back in the day. Interviewing for a job is just one of the worst things ever. Yeah, at least for me, because I'm very, you can see my character. I'm too straightforward. And investment banks and all these kind of people, they don't like that. Yeah, I have many very funny stories from interviews. If you ever want to hear, yeah, I wrote history in the UK when I went for interviews, some big banks, because my degrees were quite good. And I had a very weird dissertation thesis in my master, which was I was pricing exotic options. Right now, I don't even remember anything. But it was very. It was very hot, let's say. So I got many interviews, and I passed the CFA, at least the first level. Before I finished the university, I forged my degree. Because on the last semester of my university, I had nothing to do. So I said, fuck it, I'm just going to study for the CFA level 1. And I passed the CFA level 1, yeah. I forged with Photoshop in 2003. Sometimes I'm a genius, yeah. So I could pretty much enter whichever university I wanted. And I chose Lancaster University in the middle of fucking nowhere, yeah. And back then it was the best in the financial mathematics. Anyway, I got 2 job offers. One was in Refco. Refco was the biggest prop company in the UK. It was the room had like 500 traders, huge. I remember the ceiling was huge. They were playing pool games, and I just fell in love with that. Even the interviewers were fucking amazing. They asked me, "Do you play games and video games and stuff like this?" I still remember this interview. Anyway, I got the offer, and I got the offer as well from Bloomberg. Yeah. And I go to Greece. Man, I was fucking broke. I didn't have any money. So finally I go to Greece after a long time. It was 3 years haven't been in Greece, yeah. And I remember watching the emails. So when I saw the emails, they both canceled the graduate program. Refco got sued by TT, so he got sued by this company. And Bloomberg just, they didn't reply to me. They just said, what's going on? I mean, you gave me the offer, yeah? What's going on? When do we start and stuff like this? And they never replied to me back. And I said, man, fuck it, yeah. So I begged my father to give me £10,000, which he always insisted I would fail. And I remember he brought me in a room with, now you fucking moved, don't you? Yeah, so 4150 would have worked. But look at the volumes, man. There is nothing. The boy did approve them all wrong. Yeah, and I'm gonna read to the fact I was paying £2,000 per month. They gave us 3-month grace period, which means there were not despots for 3 months until we learn the game. And I was trading short selling and Euribor in the beginning. Mine was so fucking slow. It was just not. You were trading spreads, and they would take money out of your commissions because spreads are very commission intensive. So you would buy one like, okay, listen to this, yeah. When you have low volumes, you are subject, you are prone to this kind of moves, which is bullshit. These are not technical. Yeah, okay, 41.50 was a sell, but with those volumes, it's anybody's game. So it's what I'm trying to say. Yeah, it's anybody's game. So with those £10,000, I had to pay my desk costs and make money and pay my rent. Fucking hell, it was. I just, when you're young, you don't have. That's why they say trading is a young man's game. I just didn't think about it. I said, okay, I'm gonna fucking succeed. And listen, and I said it about the psychology. So all my other colleagues that they paid money to start trading as well, they were all worried. Yeah, would you make it? I never, not even 1 second, I thought if I'm not gonna make it. I said, yeah, I'm just gonna make it. Well, I guess I'm gonna make it. I just wanted to make it. And before I started trading, let me tell you, I have read everything that there is about trading. Every book, every book, technical, not technical. I prefer the not technical. I prefer the stories. And if you ever want to read a nice book, if you ever want to read a nice book, one of actually my favorite book about trading. He was a huge S&P trader. Just back in the day, just buy it and read it. Yeah, the guy is fucking awesome. Yeah, he was the biggest, one of the biggest locals means he traded his own money. Yeah, we are gonna love the book, and you're gonna love trading just by reading it. Yeah, you know, back in the day it was totally different, and he tells also the difficulties because he was a pit trader, and the transition from pit trading into electronic trading. Now you do not have the transition. You have the transition between click trading into algorithm trading. Yeah. So everyone right now, if you ever look a job about the trader, there is not one in this world that wants someone. So even if I apply and tell them, listen, I make 300% per year, yeah, they're gonna ask me, can you quantify it? Can you make it as an algo? Do you know anything? Can you program? I would be like, no, yeah, thank you, but no. They don't even care that I make money. The game has changed. The game is algorithmic. Period. The game is algorithmic. Before you had the pit, then you had electronic trading where people would click. Now you have the algos. Who knows what happens in a few years? But the principles of trading, that's why I'm telling you, you cannot fight the algos. They are, for example, I've said this many times, I'm just pretty fast, yeah, or I used to be. I don't know if I'm pretty fast now. Basically, I don't even care about being fast now. But I was, by the time I saw the news and at the time I act, it was around 300 milliseconds, where usually the average person takes around 1 second to see something and then react. My reaction was, we counted, it was around 300 milliseconds. Now, if I see a news or if I see something and I react within 300 milliseconds, the algorithm does the same thing and even better in nanoseconds. So 1 millionth of a second or 1 billionth. One billionth of a second. The algorithm reacts in 1 billionth of a second, and I react in 300 milliseconds. So I react around 1 billion times slower. Yeah? So what there is to discuss here? So my edge was gone, and not only my edge, every human that was fast. So what remains for us to make money? Just trade technically, catch the big moves, and you're okay. It doesn't matter if it's an algo or not. They're going to follow the same basic patterns or basic principles that it has been doing all this time. It's just things are happening faster and things are changing a lot faster now than it was back in the day. Back in the day, again, you would have one style. I would come in, I remember in the office, I even traded pre-market, no problem. I was trading the boon back then. I still have the boon just for love reasons, yeah. I would trade, I remember, 1.5 hours, go to the beach. I come in next day, trade 1.5 hours in the open. Sometimes I trade the open, go to the beach. I didn't even overtrade. I just, enjoy life and trading at the same time. I was always a big advocate of you should enjoy your life and you should stuck in your screens. Yeah. Eventually, I got stuck in my screens because I couldn't make money and I had to rethink my strategy. And kaboom, motherfuckers, that's about it. You have to create a strategy and stick to your strategy and know when not to stick to your strategy, which means when you should change your strategy or which strategy you should apply. So what strategy did we say today? I show to Alexandros, which is your host. That's your VIX. What is the VIX? I told you my best game is about I would say from 27 and above, but so this is the how much traffic they're going to be today. It's going to be volatile or not. It measures volatility of the S&P. 19 is a joke. It is a joke. There's nothing going on. Nothing going on. Let's put the things into context. If this is a monthly chart, okay, we're not talking about these times. For us, 19 right now, even with the pandemic, it's ultra low. Ultra low. My good game is here between 25 and 27. So between these volatilities, I make good money. My strategy, I have a different strategy when the VIX is 28, different strategy when the VIX is 25, and different strategy when the VIX is 19. Usually when the VIX is 19, NTD, no trade day. Better save money than lose it. So now the barriers that you guys have is that you have a time limit. So if you do not succeed within this time limit, which is a month, you have to extend. But does anybody come out and say, boy, back in the day, you had to pay £2,000 per month? The commission costed a ridiculous amount of number. I remember it was like a lot more. Now it's a lot less. So yeah, I mean, the barriers right now to enter trading is a lot less than it was back then, yeah. So anybody could trade now. So the good thing again about this course is that you can create a strategy, and if you fuck up, you can reset, pay, and test another strategy, or apply the same strategy a little bit better, and stuff like this. And when you are ready, you will not care about taking the money out of Trading Pit or any other. You will just put your own money and you will go. That's how it goes, man. Nobody cares taking money out of. But if you ask me if I would pay this amount of money to learn, yeah, I mean, you're not going to learn otherwise. You have to learn from your own mistakes. If you don't feel the pain, you will never learn. Never. That's pretty straightforward, yeah. Yeah. I mean, I spent the whole April being pissed about the market not going anywhere. It was so frustrating, man. So frustrating. Even frustrates me, yeah, that I ended small down in April. Just frustrating. March I did pretty good. But again, money management, yeah, you have to apply money management. I realized that, okay, man, the market's not moving. I just, go back to trading one or two lots. There's no point going and risking the money you made in March, yeah. So you have to apply money management. You have to have the balls to trade. You have to realize when not to trade. All this kind of stuff. But all this kind of stuff, the algorithm, they have it embedded in their system. They know what to do. You have to apply it manually every single day. Otherwise, you're not going to make money. I can't go like a fucking lunatic and trade whatever here when there is no game. It's manipulated. Statistically, I lose money on these days. So what do? Statistically, again, mathematically. Do they trade mathematically? I trade mathematically as well. Okay, no problem, no problem, no problem. Whatever it takes, like Draghi. But Draghi is not here and I'm still here. Whatever it takes. It's easy to say when you print money. Let's see how they're going to deal with inflation. Now they're trapped. I was watching an interview from Powell, and I could see the trembling in his voice that nobody knows it. Nobody. You spend enough time in trading and in the markets, you realize that nobody knows anything. Nobody. No Goldman Sachs, no nothing. Okay, there are some people that they have inside information about certain stocks, but the direction of the market, nobody knows. Nobody. No models. No one. Who would have predicted COVID? Can someone tell me if a meteorite hits Earth next month and there's a global warming again or whatever? Can you predict this? You cannot. You cannot. It's just assets are connected with each other in such a strange way that nobody knows what's going to happen. Who would have told you that small banks are failing? Who would have told you that small banks are failing? They're failing. Let's put PacWest again. Where is PacWest? PacWest. And you have lived. You have lived within the great financial crisis 2008. Again, I will put it again. So this is the PacWest. So this is PacWest. Yeah, let's go back in time when it was created. So it's the IPO was higher than the price here. Yeah, and the S&P is around all-time highs. Which model would tell me which model would have predicted this in the past? No model. Banks are failing and we are standing in the highs. Do you think anyone could have? If I told you back in the day, Nadine, just so you know, yeah, by the 9th of March, by the 9th of June, by the 9th of May in 2023, PacWest and S&P and 5 other banks are gonna fail. How would you like to be positioned? Nadine would tell me, I want to be short all my money and all my parents' money. She would be short, boom. Markets works on their own way. Nobody knows anything. Please understand this. That is why my strategy is I'm just waiting to see the market what it's gonna do. I have tried so many times just speculating. Yeah, okay, we're going down. Yeah, okay, we're going up because of this and that and that and that and that and that. I lost so much money until I realized that's the only way. This is the way. Tell you, man, this is the way. Your study is based on context and value. I like this answer. Honestly, I think so. Miss Nadine says that her study is based. Can I say this? Am I allowed to say this, or is this personal? I guess it's not. That his strategy is based on context and value and not fundamentals. Yes, it could be. Let's say I'll give you one fundamental. Yeah, let's say that something very good for the economy has happened. Yeah, and you would expect that the market will skyrocket. The market, I give 100% probability in this. First, gonna go down 300 points, and then it's gonna go up. It's gonna stop everyone out. Market trading, if you want to know what trading is a constant search of stops. Don't be fooled. A constant search of stops. Big players make money on aggressive moves when the person next to you or the person next to them, or not next to them, it's not next to them anymore, is getting stopped. That's how we make money. His loss is my gain. So they create false opportunities all the fucking day. What does not create false opportunities is volume, money being bet. When money is being bet, that's when the game is serious. Yeah, I agree. Market trading is a constant search of stops, so you have to be careful not to get caught. So yeah, and that's about it. It's not easy. And don't listen to opinions of others. Create your own setup. You only click the button, not anyone else. You don't know if someone is saying something. So, for example, you go into zero hedge, yeah? You go into zero hedge. You know, you're going to see articles. First of all, these guys are very pessimistic, and but they're so funny sometimes the way they write it, which I like to follow them. It's just bullshit, man. They have been wrong since the first day they started. They have been screaming for a market downside, yeah. Since 2000, when was the first was created? 2009. They have been getting it wrong for I don't know since inception, yeah. But you have guys like they say, okay, because of this, and they have this very thorough analysis, very scientific analysis with numbers, with strange words and whatever. Yeah. How do you know? They might want you to help with their position. Yeah. Somebody. I mean, look at Twitter. Somebody writes something in Twitter, and one stock goes 300% up. Yeah. So I read nothing. The market will give you, if you come in, if something bad has happened and you come in and the market is 3% down, then okay, just go and read a little bit what's going on. Yeah, why are we 3% down? Money do not lie. When money is being bet, they do not lie. £2,000 for desk costs. When I was trading with hundreds of traders, I was their favorite guy, man. I would come out. I was trading with an elite team, bullshit elite. We called ourselves elite. We were doing jokes, pranks on each other. Imagine a room with 150 traders. Yeah. The oil traders, I remember you would always hear the oil traders screaming. I remember their voices, and those were the guys that would always swap with some others, so they would go bust, and another new guy would come in to lose his money. Oil trader. I still remember the pain of oil traders because oil was volatile back then. Imagine now. Imagine the oil. I mean, there was a guy, I think, he was here, wasn't it? When I did the psychology seminar, and he told me I trade oil. And is he here? No, I think I remember his name. Yeah. And so back in the day, in the early 2000s, if the dollar did, if the oil moved $1, so from 74 to 75, that would be like huge, ultra huge. Yeah. So how times have changed? Huge for the oil to go $1 up, huge. And this is the daily. This is your daily oil now. On Friday, the oil was 64, with just $10 up right now. No problem. How things have changed, and this is the beautiful thing about trading. It will never remain constant. It will always be a constant challenge. That is why I came initially here. That's what I read when I first read about trading. That's a constant challenge. Yeah, it is. You see why I don't trade? Okay, maybe 4150 was. But you know why my problem about 4150 was? So, but it's the mistake I do most of the times. Where was it? I didn't even watch 4150. Okay, fair enough. Fair enough. Fair enough. I was watching this low here, 3750, and I said, okay, 3750 retraced to here. So what's the point of going short? Yeah, so 4150, but again, the risk reward is not worth it. So 4150 was the level yesterday during the cash session here. Yeah. Sorry, here. But if you ever put your own money down, you will, and if you want to make money, you will probably trade. I mean, you will take some principles that like I have. You don't trade with no volume. You just don't trade. It's suicidal. It's suicidal. So be very careful on Friday afternoons. If you trade afternoon, basically don't trade Friday afternoons. If you make money in 1-2 trades in the morning session on Friday, you are okay. Don't trade the afternoons. Basically, be very careful on Mondays. If there is nothing going on, it's better to choose not to trade on Monday than not. Then yes. I have nothing against the other days, and statistically, the most busy days are Wednesdays and Thursdays, and Thursdays even more interesting. So tomorrow we have USCPI. Let's see how much they open. I don't know why it chose to Wednesday, Tuesday to do the webinar one. It always did. What am I doing now? We have CPI tomorrow for Germany. That's the final figure probably. Right, so they expect the core CPI 5.5. But still, nobody cares now about 0.1. Yeah, the surprise would be if it goes high, if it's higher. Yeah, so if it's like 5.7 or 5.8. So the month on month is going to be higher. They're expecting a higher month on month. And this is such a confusion. Yeah, the core they're expecting lower. So the core means they takes out the noise of the CPI, yeah, which I don't know. I don't understand how they calculate it. I think they take some energy components and some food components out. And that's the CPI. So how the month to month is going to be plus 0.4 and a year of year is going to be 5%. It's just, that's beyond me. I just don't understand it, but. I'm going to stay another 50 minutes and I'm off. Yeah. Doesn't make sense. As I suspected. No, for example, I told you I always watch the VIX, yeah. So why is the VIX rising and we are staying up here? So probably if the VIX keeps on rising, we're gonna have eventually a breakout. If the VIX starts rising, eventually it's gonna break out the downside, yeah. All right, people. I'm up, yeah. No point. Have a what? 10-point range. Ain't worth it, yeah. We'll see you. I will prepare some videos probably within next week where pretty much I'm gonna say what I pretty much keep on saying on this webinar. If you ever want to trade S&P, or just watch them, yeah. S&P is a technical contract. Please understand this. One of the most technical contracts there is out there. Okay.
European banking news now in an interview on CNBC with a German financial.
I'm sure there was nothing going on, but it is what it is. See you next Tuesday, gentlemen, and Nadine. Have a good one.